The financial requirement is one of the 5 requirements that I mentioned in the last webinar. The government's presently set the income level threshold to 18,600 for your partner, 3,800 for the first non-British child, and 2,400 on top of that for any additional children. You'll need to demonstrate that your threshold is met through one or more different sources of income and provide evidence of that in specified form. There's only certain types of income that can be counted and only certain combinations that are allowed to be put together. The rules split up the income types into 6 different categories. Category A is the salaried or non-salaried employment income of the sponsor over a 6-month period. And category B is the salaried or non-salaried employment of the sponsor over a 12-month period if 6 months is insufficient. You can also use the income of the applicant if they are in the UK with leave to remain, so it can't be used for the first entry clearance visa. Category C is non-employment income sources. It could be rental income from a property that is owned by yourself or your partner. It could also be maintenance payments from a former partner. It could be tax-free maintenance grant from university, or it could be interest from savings or dividends or shares or other investments. Category D is cash savings held by the applicant or sponsor. The threshold for cash savings isn't actually 18,600, but there's a formula that we have to use to calculate the right amount. So if you are someone with no income, your threshold is going to be 62,500. If you have, say, an income level of £10,000, then your pro rata amount is going to be 37,500. It has to be liquid cash savings, and it's the minimum they look at over a 6-month period. The account holder can be yourself, your partner jointly, but it could be no third parties. Other things to bear in mind is that multiple accounts are allowed. In some cases, savings from investments or sale of a property can also be used, provided you've held that property and those investments for 6 months prior to the date of applying and have sold that before you lodge the application. Category E is pension income held by yourself or your partner. It could be state or private pension, and it has to be a source of income for at least 28 days before we apply. Categories F and G are self-employment categories. Category F uses your figures for the last financial year, whereas Category G uses an average of the last 2 financial years. Self-employment can be in the form of being a sole trader in a partnership, owning a franchise, or being a director or an employee of a limited company. Self-employed income can't be combined with savings. The evidence required for an employed sponsor are 3 things. The first is 6 or 12 months worth of payslips. The second is 6 or 12 months worth of bank statements. And the third is a letter from your employer worded a specific way. The evidence required for savings are 2 things. The first is the bank statements for 6 months preceding the date of application, and the second is a declaration from each account holder as to the source of those savings. You would have to make sure that the end date of those 6 months is no later than 28 days before the date of application. Certain benefits allow you to bypass the threshold of 18,600 and instead rely on what the government calls adequate maintenance. A couple of examples of the eligible benefits are carer's allowance, disability living allowance, personal independence payment, and there's a few more. Adequate maintenance is basically showing that you have a place to live in which will not be overcrowded by your inclusion. And the second part to that is showing that you have a disposable income above the amount that you would get if you were claiming income support as a family. This basically means that you take your net income and you deduct rent and council tax, and whatever you're left with should be above what you would get if you were claiming income support from the government. The finer details of each income type could obviously not be covered in this one webinar, and the answers of course will differ on a case-to-case basis. The 2 main points of advice that I would give out at this stage though is, firstly, start really early, Preparation really is key. These applications are incredibly document heavy, and some of the evidence will even span across 12 months before the date of application, so it's always best to start around a year and a half before you intend to apply. And the second point is to be very careful about the format and the content of the evidence that is submitted. The rules are contained within a schedule called Appendix FMSE, and they dictate exactly what each income source should be supplemented by. Any shortfall or deviation from that can cost your refusal if Home Office decide not to exercise their discretion to request any further documents. And finally, it's always best to consult with an expert to have them look over the entire set of documents and your preparation, and also let you know if there's any changes of law.